The branches of accounting. Number 1. Financial accounting. Financial accounting deals with the recording of financial transactions, classification of financial transactions, summarization of financial transactions, and interpreting them so that the useful information is communicated to the various users of accounting services. This we have already discussed, and whatever we have discussed is the main objective or the subject matter of financial accounting. This branch of accounting provides information about the operating performance and the financial position of a business organization on a particular date and throughout the period of accounting which has been done by preparing the trading and profit and loss account and the balance sheet. The second type of accounting is your cost accounting. This branch of accounting helps in estimating the cost of the goods and services that are being produced by the enterprise. When the cost is ascertained, the profit margin is added to it and the selling price is determined of the goods and services. So, cost accounting helps in determining or fixing the selling price of the goods and services. Then comes the management accounting. Management accounting refers to accounting for managerial decision making. It involves use of analytical tools like ratio analysis, cash flow statement, fund flow statement, budgetary control, etc. And all these tools of analysis are used by the management. The management takes the help of these tools of analysis, and whatever accounts have been prepared by the financial accounting, cost accounting, the management will analyze them and take important decisions for the future. The decisions on the matters of either to make a product itself or to buy it from the outer sources, or shut down point, or fixing selling price of product. All these things are being done by the management, and they provide this information by help of accounting information. Then social responsibility accounting. The society provides different infrastructure facilities to the organization, capital to the organization, labor to the organization, and other facilities to the organization. Thus, the organization on its part has certain social responsibilities towards different persons in the society. For the employees, the responsibility of the business is to give them fair wages, fair remuneration according to their work, bonuses, part of the profit, and so on. For the general public, the hospitals, community centers, housing facilities, education for the children are to be provided by the management of the business organization to its employees. To the responsibilities toward the shareholders, fair return on the investments that they have made in the business organization, and responsibility towards other persons as per the need of the person. Therefore, for the rapid growth and for the prosperity of the business organization, it is important for the business organization to discharge its social responsibilities towards all those persons or all those groups who are contributing something or the other for its growth and development. This is all done by the help of social responsibility accounting. Now, there are certain qualitative characteristics of accounting information. These qualitative characteristics of accounting information are: number one, reliability. Whatever accounting information is to be given to the persons, that information should be reliable. This is possible only when it is free from error and personal biasness. The transactions are supported by documentary evidences and they are verifiable. So whatever information is being given, that information should be reliable. Then second, relevance. Accounting information exhibited by the financial statements must be relevant with the informational need of the various end users of the accounting service. Means that the information that is being communicated or that is being provided should have some relevance to the user who is seeking that information, so that he may take decisions in favor or against the organization. They should only disclose the statutory minimum requirements. They should also disclose other information which is desired by the users. For example, information about segments, departments and accounting conventions should be disclosed so that users may draw meaningful conclusions. But what is relevant information is a disputed matter, as one thing is relevant for one user and may be irrelevant for the other. Number 3, understandability. It says that users of financial statements must interpret the accounting information in the same sense as it is prepared and conveyed to them. Thus, the users are assumed to possess reasonable knowledge of business and are willing to study the information with reasonable diligence. So, the users should also have the knowledge of all those things that the business is doing and how it is doing, so that whatever information is being provided to them, they can easily understand that information. Then comparability. The financial information should be relevant, reliable and understandable to the users. It is equally necessary that accounting information must also be comparable over a period of time and with the accounting information of similar business entities. Means comparison can be made within the firm of one year with the other years, maybe in the past of the past years, to watch the trends, or the information available should be compared with other firms' information to see what is the trend of the industry, or to see whether the firm is able to cope with the trends of the industry or not. Thus, standardized accounting policies be followed consistently so that inter-firm comparison and intra-firm comparison of same firm over a period of time can be made effectively. Hence, accounting information must possess all these qualities. However, the significance of the financial reporting is reduced to a user who lacks understandability and comparability of the accounting information.